Today I'm wrapping up the results of the 2021 10K Small Account Option Trading Challenge. What's up guys, my name is Nick and welcome to my channel. In January of 2021 I began the trading year with just over $10,000 in a small tastyworks account. The objective was to trade for absolute returns in an attempt to grow the account to $25,000 as quickly as possible. In this video then, I want to tie up the loose ends and put this challenge to bed. Let's take a look at how we did, how long it took to get to 25k, and break down some of the numbers. Before we get into it though, please smash the like button, and if you haven't already, consider subscribing to the channel. It's free of course, but helps me out a ton. With that said, let's get straight to it, and I'll see you on the other side. So if we jump into a screen recording of my tastyworks account, you can see this video is dated October the 11th, 2021. At the time of this recording, I was traveling throughout both the United States and Europe, and that's why this video has been a long time coming, so my apologies there. Note, the net liquidity in the account on that particular day was $25,031.18, thus achieving the 25k target. The gross profit year to date was $7,100.32. Now, this clearly doesn't add up to $25,000 because it's important to note that cash additions were made to the account during the course of the year. The original rules of the challenge stipulated $1,000 would be added to the account on or around the first of every month. I discussed this in an earlier video when I first began the challenge, and if you'd like to check that video out, I've included a link somewhere up here. When building a small account, it's important to make continuous, regular contributions regardless of the amount. The discipline to add money every month and pay yourself first is critical to help build more rapidly and compound the rate of growth of a new account. Let's break down the rates of return with these cash additions in mind. While the value of the account has grown by almost 150% over the period up to and including October the 11th, clearly this significantly overstates the return on investment. The gross return, as we discussed earlier, was just over $7,000, and net of fees and commissions, the total year-to-date profit was actually $5,922.14. So, based on the starting equity of exactly $10,109.04, the rate of return is 58.6% for this 283-day period, or 75.6% annualized. This too is also overstated since the average account balance grew due to the cash additions made over the course of the year, and so the return should be properly weighted to reflect that. This weighted 283-day return then was 53.4%, which when annualized over a 365-day period is 68.87% per annum. For context, over the same period, the S&P 500, which had an extremely good year in 2021, returned 17.8% and 26.9% for the year overall. Unsurprisingly, the higher small account returns came with higher associated risk, and the ride was a little bit more bumpy than simply remaining long the index. Over the course of 2021, the S&P 500 experienced a maximum drawdown, that is a peak to trough decline, of just 5.2%. While trading for absolute returns was rewarded with a significantly higher annualized return, the worst drawdown the system experienced was between mid-March and mid to late April of 20.1%. This is well within the expected parameters of the trading system and was not a cause for concern at the time, but when trading for your own account, it is important to execute a strategy that is in line with your levels of risk tolerance, since drawdowns and losing periods are a characteristic of all trading systems and something good traders learn to live with. I'm not going to break down each and every trade I made within this video. There are far too many to look at individually, but if you would like to see more general details in regard to the trades taken, please let me know in the comments section below, and I'll consider putting that together for a future date. In summary then, the small account challenge took 283 days or 190 trading days to complete. The weighted return on investment over a 283-day period was an extremely healthy 53.4%, or a 365-day annualized return of 68.87%. The largest drawdown during this trading period ran from mid-March into mid to late April, and peak to trough was 20.1%. If you made it this far, you made it to the end, and your support is very, very much appreciated. If you enjoyed the video, please drop me a like and consider subscribing to the channel here, or you can click somewhere over there to watch other option-related content on this channel. If you have any feedback or questions, please feel free to drop them in the comments section below. I do answer them all personally. Again, thanks for your time, and I'll catch you on the next one. Cheers.